in my experience, one of the least understood areas of investing by investors is how the charges work, what they're actually paying and who they're paying fees to for those investments, whether it's through a pension, an ISA or investment account. So in this video, I'm going to try and shed some light on it and clear it up for you if that's a question that you have. So depending on whether you invest via a financial advisor or a financial planner, there will be 2 or 3 charges. So the first charge is the fee that you pay your financial advisor or financial planner. And it's quite possible, quite probable, that you'll be paying that through the value of your pension or your investment account. And it might be a fixed fee, a fixed monetary amount, or it might be a percentage based. But usually it'll be coming from the value of your investment on a monthly basis. So you want to make sure that the value you're receiving from your advisor is greater than what you're paying for in fees. The second charge that you will be taking from your account is the administration charge. So that's a charge levied by the pension, the ISA provider, or the platform provider who is administering the product for you, and that's the cost incurred for taking your money and investing it, or if you've got a pension, going to HMRC and making sure you've got the tax relief from your pension contributions, or paying out money as and when you need it. Now again, it might vary. It might be a fixed percentage, a fixed monetary amount, or it might be a percentage based charge. More often than not, it's a percentage based charge. If you're paying 0.3% or less a year, that's pretty good value. Anything more, you need to start questioning whether you're getting value, because pension and investment providers these days are pretty much more of a commodity. It's very hard to differentiate any of them, so you want to keep those fees low. The third area of fee that you would be paying will be to the underlying fund manager, the companies that are investing the money on your behalf. They're the companies that will say, well, we're going to invest in a particular stock market, or choose particular funds and companies to invest in within a stock market, or other assets like government bonds or property. And the fee that you will be paying to them again will be percentage based more often than not, and you want to think about the level of fees you're paying. Again, are you getting much value? If you're going to invest in an index fund, so you're investing in the whole of a stock market and buying every constituent part, every company within a stock market, you might be paying as little as 0.05%, maybe up to 0.2, 0.25%. If you're choosing an active fund manager, someone who is deciding which specific companies they will buy and say, well, we're going to get you a higher return because of our expertise, then you'll be paying more for that service. You might be paying anything from maybe 0.4 up to maybe 1%, or if not more, and that's where you really want to question the value you're getting. Are you getting additional returns above what you get for an index after you've paid those charges? And often the answer is no. So really question those fees there. And then also linked to the fund manager fees are something called transaction costs. So every time a investment is bought and sold, a share is bought and sold, or a government bond is bought and sold, the fund manager will be incurring transaction fees, and these are stamp duties or commissions levied by the brokers in placing those trades. And the more that a fund manager trades, the more that you're going to be charged. So you want to make sure that there aren't too many transactions going on, because that's going to reduce the return that you're getting, and the harder your money has to work in order for you to generate a profit. So that covers the 3 charges that you would typically be paying. In summary, an advisor charge if you have an advisor helping you with your money, the administrator charge levied by the pension or the investment provider, and then the fund management charge levied by the firms that are actually managing the money on your behalf. So I hope that helps.